today's report we highlight the VIX index. The VIX index is a gauge for the volatility as we measure how strong the volatility overall, particularly against the S&P 500. In general, higher VIX reading would actually signal a higher volatility in the global equity market, and in that sense actually have given significant move in terms of how the market is going to react. So as you can see here, as per reading on VIX index, it has been creating so-called a significant breakout move. If you notice the breakout on the what we call that last week as break above the upper Bollinger Band, I think the same what we call that similar what we kind of the breakout was occur back in September 2021. So the similar pattern here you can see at the start of the what we call that a major corrective move, which is on the start of 2022. So in a nutshell, the spike in the overall volatility is actually a signal, so-called a period of the higher volatility in the card. I think if you look on the reading of S&P 500, it is within our earlier expectation as we highlight during the market outlook, where we expect some sort of the pullback or corrective move. Now the key right now, whether the index capable to hold right within the above the immediate support at 3765. So if the SP are able to what we call that holding pretty well above this kind of support, that means the room for further recovery is still pretty much there. However, if you look on the reading on the RSI over here, it has actually declining below both average line, indicating that the selling pressure is still pretty much strong. So I think in the sense overall support is still pretty much look a little bit supported, but if the immediate support has been taken out, that means we think there's more chance for the stock, so for the index in general to trade much more lower. As for now, we can expect short-term stronger volatility in the near term. Meanwhile, for Nasdaq, it did have a stronger baseline right within 10,500, but in general, we think as long as the support at 10,500 remain intact, there's no what we call that some room for further decline, particularly where you see a reversal at 61.8 at 10,500 is remain what we call that critical. So any pullback likely to be kept for now within sub 11,400 and 10,500 at least in the term. So structure remain positive. Short term, however, we can expect a stronger volatility, and the index could actually trading lower. Now on the Malaysia, if you recall earlier at 1,500 remain our resistance. A break above 1,540 could actually end the major downtrend move, which as for now it did not occur. We actually anticipate a little pullback earlier, but now a little pullback has turned into much more a bigger corrective move. So our concern right now, the key support at 1420 and 1380 going to be capable to hold or not. If this level are going to be what we call that broken, that means there could be more downside risk for the KSCI. As for now, we think 1380 remain key support for the KSCI. For small cap, however, we earlier correction move can expected to continue. The reading on the weekly chart you can see here is remain on the strong side, so we expect further decline actually in cut. The support has yet been tested, so the support at 15,300 and 40,500 is actually pretty much support for the small cap. So in the near term, even population market, we can expect a further volatility at least in the near term. Quick look on JCI index, we have just broken the head and shoulder pattern. We expect the wave 3 going to drag the index much more lower at 6,650, while energy sector for the Indonesia market, it has start to morph into what we call the bigger triangle pattern, which we expect going to decline further, at least testing the lower support at 200 average. For Philippines, the corrective move is expected to go down further. It's just holding within 38.2 Fibonacci level, and we expect it going to test a little bit lower support within 6,000 points. Meanwhile, for Philippines, financial index, we can see plenty of rejection as occurred for the past few weeks. So this actually warrant for a corrective move ahead. Quick look of STI index Singapore. The initial, what we call that, pullback was beyond what we expected earlier. So it just create a new lower low structure. So because of that, the major uptrend move is now at risk. Regardless, we think there's a support at 3130 and 2970. As long as support intact, the major uptrend channel stay pretty much intact. For small cap in Singapore, downtrend is likely to continue. The recent rebound was pretty much kept within our resistance level, and currently is actually broken, creating new lower structure. So we expect it actually going to re-challenge the major low at 240 points. Quick look on Thailand, 1,600 not able to absorb remaining selling pressure. So we think there's a decent chance for the Thai index to trade much more lower. Same thing for my index, representative for the small cap in the Thai market, expected to continue much lower, although there's a significant bullish divergence response. So watch out for potential reversal signal, particularly for my index. Last but not least will be for Vietnam. Vietnam, despite trading lower structure, is still trading within the uptrend channel. So it is interesting how Vietnam index or market in general has doing much better versus the other Asian region. As for now, we expect both could trade higher, a little bit higher, and could actually what we call that, stage at least the technical rebound in the term.